Gold, silver and platinum group metals on the move. Torsten, welcome back. Precious metals, I think it's a big theme still for us this year. And the markets have moved sharply in the first quarter, gold and silver especially. And we want to talk about precious metals in special, I would say. We just saw here some nice gold bars in the back. What's up to your performance? Was quite good so far. And silver and PGMs are catching up.
Yeah,
What's the matter?
Probably one of the surprise factors in the markets. That's a big wealth managers probably a bit too hasty in getting rid of gold and other precious metal from their strategic positions. So they're buying back on that. And the tide has turned on commodities, and definitely the tide has turned on precious metal as a subsector. Because why move precious metal out of favor in regard to strategy? Easy reason is we've seen Fed hikes in front of us, higher interest rates, good economy, so everything wherefore you don't need an insurance. Precious metal are in insurance against craziness. So therefore gold has a very good run. The other commodities in the sector like silver and the PGMs, like platinum, palladium and also rhodium, more industrial related. So therefore their run is just about to catch up in the moment. So therefore quite interesting. But overall the precious metals are back in the game because of the dovish tones of the Fed, because of the interest rate level and because of a rising inflation despite the low interest rates.
That's right. Yeah, I mean gold is, I would call it one of the last storages of real wealth, right? If we talk about gold-silver ratio, we should also mention, or we should talk about little brother silver, right?
Yeah, normally you talk about silver in terms of a high beta gold. So lots of analysts in the field don't distinguish that to that detail. But there are interesting factors moving along in the silver industry because of a malaise of industrial metal producers, like the mining companies producing like zinc and lead deposits, closing down exposure. So therefore, one of the positive factors we like on the zinc market. This implies interesting supply side factors for silver, because silver to 50% is a byproduct of base metals. So meaning that only 50% in the silver industry comes from primary silver mines. So therefore, there's a demand effect still high in regard to gold and silver, but supply side silver looks more attractive in the near-term future. So I don't want to overstretch the gold-silver ratio for that topic, but it's an interesting chart in regard to silver outperforming gold. And we believe that in the next at least 6 to 12 months, silver has a more bright future compared to gold.
If you would call it on a relative basis, let's think gold can rise 10%. What can silver rise?
So normally you have a beta effect to gold about 1.5 to 2. So therefore, if you have like a 10% rise in gold, so a 22% rise in silver would be like very usual. Normally you should imply a bit more in regard to silver, in regard to an outperformance here. So this makes it more attractive for the silver companies, basically. When you have a silver price moving up that high to basically the 20s, 22 level, the silver companies, silver producing companies have much more in the P&L from the measured and indicated resources versus the gold industry. The gold industry looks good at this level, but silver starts to look fantastic.
Oh, I like that. Let's move from silver to platinum. I mean, platinum, looks also attractive. Why?
Yeah, the platinum producers suffered in terms of low prices, but also the mining conditions. You have to keep in mind that lots of production, platinum, 3/3 of the production coming from South Africa. South African mining industry from their fundamentals is suffering. What you have to keep in mind, on the other hand, is that in terms of the devaluation of the South African rand, you're still at these levels at a profitable stage. So you have a contradiction between the economic conditions in the countries versus the profitability. So therefore the companies are a bit torn between two extremes. So therefore in this sector we prefer actually the physical metal exposure. So if you are a gold investor, you should diversify definitely into platinum, because the price discount to gold is at a record high, what you see here in the chart. If you are willing to take a little bit more risk, it makes also sense to diversify a bit into the PGM, so platinum group metal industry, in terms of the companies.
Okay, so in terms of the companies, as I heard, Sibanye is on the way, to be one of the, to get into the market with 1.3 million ounces of platinum on production. Is that a big amount, a small amount for the market? Will it hurt or will it help?
It's a big restructuring going on in South Africa in terms of the mining industry. Talking about Anglo-American as a mother company for Anglo-Plat, the market leader in this field, but they're diversifying and selling assets, so therefore they're restructuring assets. Sibanye is one of the companies who can take profit from that. There are like a handful of medium-sized producers, but the industry is very, very small in regard to its size of companies operating here.
Okay, great. So you would definitely advise to have a look on those companies, right?
In the companies, and especially on the metal. Here would take the emphasis on.
Great, fantastic. Torsten, thank you very much. And all the best. And I think the outlook for precious metals and the platinum group metals is very bright.
Thanks, I think so.
Super, thank you. Ladies and gentlemen, that was Dr. Torsten Dennin, the Chief Strategist from Tiberius Asset Management in Zug. And you heard it. Precious metals, platinum group metals are on the focus, on the run. And definitely have a look on that. I'm your host, Jochen Steiger, Commodity TV. Thanks for watching us. And also in partnership with Dukascopy TV. Bye-bye from Geneva.